In this third lesson on Portfolio Analyzer, we will see how to handle single bond investments. Efficient Frontier can handle any bond listed in any of the following markets: EuroMOT, Berlin Exchange and EuroTLX. Let's make an example and suppose our client holds the following fixed income instrument. This is a BTP, an Italian Treasury bond, due on 2067. As we have seen dealing with single stock holdings, Efficient Frontier needs to convert each holding into its corresponding asset class. Let's see how to proceed. Type here the ISIN code, press the Get button info and let the software make the rest. This is the most recent traded price, and this the security description. In order to assign this bond to an asset class, we need to enter some additional information. Choose proper bond duration from the menu. From bond description, we see that it expires in 2067. Therefore, we will choose the more than 7 years item from the menu. We know this is a government bond. And we also know that it is a euro-denominated bond. And finally, we know that it is an investment-grade bond. The system has automatically assigned a proper benchmark market. We are now ready to insert held notional amount. And add this holding to our portfolio. We can go on this way for all bonds held in our investment portfolio. It can happen that Efficient Frontiers fails to assign a benchmark market. Let's consider following supranational ZAR-denominated bond. This is a European Investment Bank issue due on 2025, denominated in South African Rand. As we can see, no benchmark has been assigned. Here, user expertise comes into play, in order to choose a good proxy from the list. This is a AAA rated bond, so we can say there is no credit risk. It expires on 2025, so there is duration risk. And it bears currency risk. It's a ZAR-denominated bond. We wish we had a long-duration, high-grade ZAR-denominated benchmark market, but we haven't. So, let's choose one of the two risk sources, duration and currency, and choose a benchmark. In this case, we focus on FX currency risk and choose emerging market bonds as our proxy. In this lesson, we learned how to deal with bonds. In the previous guide, we dealt with single stocks. In the next lesson, we will see how to manage ETF and ETC. What never changed is that every single financial instrument must be associated to a benchmark market.